Hello and welcome back to the Built Different podcast with your host, Steven Pettigrew. Today's episode is another solo episode, and it's a topic that I get asked quite a lot on, whether it's online, in person, when I'm speaking at events, even when I'm doing podcasting, and it's around business buying strategies. So how do you actually buy a business? It's a minefield out there. You hear so much different and conflicting stories, but I'm going to tell you some real strategies that I've used, that my partners have used, and I'm aware of, that can help you buy a business. And the key thing here is without using your own money. What's the benefit of buying a business? Well, you are acquiring something that's established, that has staff, that has real good talent in the business, potentially. You're benefiting from the cash flow of that business, the profit of that business, and you can leverage the assets of that business to grow again. And when you buy a business, you're actually potentially doubling or trebling the size of your current operation. And what that does is actually improve the shareholder value of that business. When you go to sell the business yourself, if you've got 2 or 3 complementary businesses in the group, it adds to the multiple that you can attract for that business, which can obviously get you a big capital event that you can reinvest into different asset classes. In terms of the different strategies out there, so one of the most common and popular ones that you might have heard of is an LBO, which is a leveraged buyout. And what that actually is where a buyer will look to buy a business and look to leverage the assets of that business in order to purchase it. So it's a very common way. Most small businesses are purchased in that fashion, certainly businesses doing over £750,000 of profit. And assets typically that can be leveraged would be machinery, equipment, vehicles. You could also leverage the invoices, which is invoice financing. You could do a cash flow loan. There's so many different ways to structure an LBO. However, it's extremely risky. And the reason I say that is I'm aware of many people who have joined a course, and these courses peddle the idea that a leveraged buyout is the best and easiest way to buy a business. And in some respects, that's true. It's very easy in some cases to go and leverage a business, go to a bank, go to a second lender, second tier funder, and get funding for that business. They will ask you, though, to sign up to a personal guarantee, which was spoken about on another video. Now, I'm aware of so many people who have done this and over-leveraged the business that they've purchased. And when you do that, it's extremely risky, particularly when you borrowed money during times when borrowing was cheap. So pre-COVID, borrowing was very cheap. You could go to a bank, go to a second-tier funder and get funds that were relatively cheap with low interest rates. But in the last few years, the interest rates in the world has completely changed and turned upside down, and that borrowing is now more expensive, and businesses have struggled to keep up with those payments. I know several people who have signed up to these and lost the business. They have over-leveraged and they couldn't keep up with the payments, and then ultimately they have lost the business, the cash. They've lost their personal assets as well, which is the most important thing that I want to stress with LBOs. If you are signing up to an LBO, you'll typically have to put a personal guarantee in place. And if you default on that loan, they can come after your house, cars, your personal assets, cash in the bank, etc. And I know people who have actually had divorces and it's broken their family up because they have went down that road. So it's extremely risky. I would always encourage people not to do it. I've flirted with the idea of doing LBOs. I was 2 weeks away from completing an LBO myself, which was around £2.5 million that I would have been liable for on a personal guarantee. Eventually that deal didn't happen, and I've found some different ways to structure deals that protects you as the buyer. So that's one of the first ones. You can do a bit of leverage. That's maybe important to say. If you do a bit of leverage rather than 100% of the business, that's maybe a safer way to do it, and try and do it without a PG. There is means and ways of getting finance without personal guarantees. The other way to buy a business is through seller finance. And this is one where, again, no money down for yourself. But it's quite a difficult one to pull off as a buyer, because effectively what seller financing is, when you go to buy a business, you agree a deal structure with the business owner whereby they get paid from the funds in the business. So the business might have some surplus cash in the business bank account that's not working capital. That could be used as part of the day one payment, for example, as the initial consideration. And then the business owner is paid up through future profits and cash flow from the business. Now, that is a very common strategy. I've used that strategy before, but if you are new to this game and you don't understand why that's a good strategy for both sides, then it's quite a hard one to pull off. From a seller's perspective, they will think you've not got any skin in the game and you're just using my business to pay me off. The reason that that's a good strategy for SMEs is SMEs are actually a very volatile asset. So one day you could be flying high, loads of money, loads of profit, and the next day you could lose your biggest customer. The biggest customer might not pay you on time. Your best staff member or best sales person goes. Your health goes because you are the business owner. And all of a sudden, that business is not worth what it was yesterday. So the business can change value on a daily, weekly basis, depending on the cycles of that business. And that's why people are very hesitant. For businesses doing less than £750,000 of profit, people are very hesitant to put their own money into those types of businesses because they are very volatile. It's not like a house where it's a bricks and mortar fixed asset that you can compare it against other houses on the street. Businesses are a very volatile asset and are dependent on so many factors that are actually out with your control. So seller finance is a very good way to buy a business, and the seller can have guarantees in there and protection around that without having personal guarantees. Another really popular one, which we have done quite a lot at Monopoly, is consulting for equity. Now, that could be where, for example, a business is struggling with a particular problem. So they could be struggling with cash flow, debt, getting enough leads into the business. They could be struggling to make profit and don't know how to increase their profit margins. It could be any number of pain point that that business has or obstacle that they don't know how to solve. And one of the ways that we help business owners with that is we will acquire a percentage of the business in exchange for fixing that problem. And because we've got so much experience running businesses, starting businesses, selling businesses, we understand all the different levers to pull. We've got our own internal team, but we've also got a massive network outside of that, whereby if there's a problem to fix, we tend to have the solution. So when we acquire a business for a minority stake, we would acquire that minority stake, fix the problem, have an agreed timeline where we will agree to fix the problem by this date and put a guarantee in place, and both sides win from that situation. We don't risk our own capital into a business that we don't know, we have no history on, and it protects the seller of the business or the business owner as well, because when they have someone coming in that can fix that problem, that's the tick box for them they're looking for. However, because there's a guarantee in place, if we don't hit that target, then they get the shares back. So there's no situation where anyone loses out in that, which is a very, very popular strategy at the moment. A lot of people are doing it. Not a lot of people can actually back up what they're saying, and that's another problem. There's a lot of sharks in this industry. There's a lot of charlatans in this industry, but people who can actually deliver, that's a great strategy to get started when buying businesses. And another way to do it is actually through investor funds. You might have people in your network who have investments, who have funds they can put into businesses, and they might be on friendlier rates than maybe going to a bank. So you might have friends or family, you might have a business partner who maybe they've put their cash into property or stocks. This is another way for them to get a return on their money. They could even get some equity in the business. So that's another way of getting to purchase a business without using your own cash. And that one can be quite popular for business buyers as well, because again, you don't want to risk your own capital if you can help it. And we've done that on a couple of occasions as well. So for all those different, and there's many more strategies, there's at least 15 or 16 other strategies that I'm aware of that can help you buy a business, a small business. But if you're looking for more information on this sort of stuff, I've got various tools on my LinkedIn profile and on my Linktree. I've got webinars, scorecards, this podcast, of course, and various other bits of information that can help you buy businesses. If you're a business owner who's already got an existing business, this is a great way to increase your income, increase your cash flow without necessarily risking your own capital. You could, of course, as another strategy, leverage your own assets of your own business to buy another business, and you can get more favourable rates in that basis. And again, I've got to stress, without a personal guarantee. So if you're looking for more information on this sort of stuff, head to my LinkedIn profile at Steven Pettigrew Investor, or check out my website www.monopolycapital.com, and I'll see you again very soon.